Hi everyone, let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario on the daily time frame, where we're looking for a finished three-wave corrective structure and continuation to the upside. Now this means that on the lower time frames we want to count bullish impulsive structures to the upside, and that is something that's starting to become a bit of a problem because of the size of this sideways range. Because if we are bullish and we look for a move towards the upside, we want to count one of three structures: a impulse, a diagonal, or a multi 1-2 of the low. Now, if we first start with a diagonal to the upside, we are looking here for wave 1, 2, 3, 4, 5. Now, first of all, it is way too early to start looking for diagonals. Preferably, you wait for a wave 4 to be in. But even if we would look at diagonals, the probabilities are low for a diagonal here because of your wave 2. Wave 2 and Wave 4 have to be zigzag family structures, and currently the probabilities here locally are higher. We're looking at a WXY structure, a sideways double combo, a sideways WXY, instead of a zigzag or a double zigzag, which reduces the probabilities for the diagonal. And then we have a multi 1-2, which has to be counted as a 1-2, 1-2, and then impulsive continuation to the upside. Officially not yet invalidated, as the invalidation is taking out this low over here. But what lowers the probabilities for this scenario is the size of this range over here, because this is your second wave 2, right? This is your first wave 1 and 2. This is your second 1 and 2. And the second 1, 2 is preferably a little bit shorter in time and price compared to the first 1 and wave 2. But you can see how big this range is compared to the first wave 2 you have here, even though this is a lower degree Elliott wave, wave 2. So that's not really something that supports a double 1-2. And then we get to impulses, and an impulse means that this structure to the upside has to be counted as a 5-wave move: 1, 2, 3, 4, 5. Well, just by looking at this structure over here, it is very difficult, even on the 1 hour or 50-minute time frame, to count a solid 5-wave impulsive move towards the upside here. 1, 2, 3, preferably we had another 4 and a 5, but this being a wave 4 is already invalidated because we have touched the 0.618, which pretty much is an invalidation for wave 4. Very, very, very low probabilities that this is wave 4 price action 4 or 5 to the upside. And also we have overlap with this high. Now, even though I count this move to the upside here as a diagonal ending at this high over here, which is a high that we haven't yet touched, a very strong guideline in Elliott waves is that a wave 4 should not overlap with any price action of wave 1 and wave 2, so that is also something to keep in mind. Smith and DV1234 have attempted to count this move towards the upside as an impulsive structure. So let's at least look at their counts. First of all, the chart of Smith: 1, 2, 3, 4, and then a wave 5 towards the upside, with inside wave 3 a 1, 2, 1, 2, 3, 4, 5, 4, 5. Now, based on the count that you see here on the chart, there are no invalidations. There is no wave 2 moving below the origin of wave 1. Wave 3 in all cases is not the shortest wave, and wave 4 doesn't overlap with any of the wave 1s. So from a rules perspective, the impulse to the upside is fine. But from a probabilities perspective, your wave 5 is extended, which is a lot more rare than an extended wave 3. And of course, if we do look at the wave 3 sub count, it is a bit awkward for wave 3 to have this type of structure, but I do think it is a great idea. And then of course the WXY to the downside in a wave 2. This is the count of Mr. DV1234 shared in the Discord channel as well. And here what you see is the bigger green count: 1, 2, 3, 4, 5. So it's a little bit different compared to the one of Smith, right, where he counts 1, 2, 3, 4, 5. And then in wave 1 he has a diagonal structure. In wave 3 we have this little bump here at the beginning, so he counts this as a 1, 2, 3, sideways longer 4, 5. And then this range over here, the green wave 4, right, is matching the green wave 2. So 1, 2, 3, 4, and then an impulsive move up in a wave of 5. So if I would go to the 1 hour time frame, and basically what we look for in that case is a wave 1, 2, then a 3, 4, and a wave 5. So this is your wave 4 matching your wave 2. Now, based on probabilities from an Elliott wave point of view, most commonly a wave 4 is longer in time than a wave 2. Of course, in this case, that is not true. Now, it's most commonly. It's not a rule, right? It's more like a guideline. This being a wave 4, this here being a wave 2, clearly wave 2 is longer than wave 4. But it is not an invalidation. And what I also at least like about the creativity of DV1234 is we indeed had this bump over here to the upside, and we can count 1, 2, 1, 2, 3, 4, 5, but where is our next 4 and 5? So I think it's a great idea to count it 1, 2, 3, 4, 5, potential for another 4 and 5 to finish an impulse towards the upside. So when we do look at the impulsive structures to the upside here, then a diagonal has low probabilities, a multi-1-2 has low probabilities, and if we want to count an impulsive structure to the upside here, as both Samith and DV1234 have attempted to do, it is awkward, right? But it does follow the rules. In the count of Samith, the wave 3, of course, is a bit awkward to count, and wave 5 is extended, which is rare. And in the count of DV1234, which is a great idea as well, this is your 4, this is your 2. Commonly, wave 4 is longer than 2, and also your wave 4 here is shorter than the 0.382 fib time, by the way, which is what you see on the chart over here, right? And even if I would pull it from this high, you can see it's still shorter than the 382, which is very rare for a wave 4. So it's not that we can give it awesome probabilities, but at least if we have to pick one of the 3 options here, an impulse for the bulls would be the one, right? Now this then leads us to the bearish scenarios, where we are looking for price to make one more low. On the 4-hour time frame, this move towards the upside can quite easily be counted as a potential ABC, right? We have a diagonal in our A, we look for a flat in B and a C to the upside, hitting the 1-to-1, common target for a wave C. And based on the current range over here, preferably we look for a bigger 3-wave structure. Of course, after an ABC zigzag, you can look for price to move down, but then you want to see impulsive structures to the downside, which I'll show you in a second, have lower probability. So therefore, preferably, we look for a sideways or sharp WXY, which means a continuation of the range and likely still take out the 63K high. Currently, the minimum target for Y here is 66.1K, a trend-based sub-extension from the start to the end of W to the current low here, by the way, of your wave X. So that is something to pay attention to. And a wave Y can be a zigzag, flat, or a triangle, meaning a 5-3, a 5-wave structure, a zigzag, a flat structure, A, B, and then a wave C, as well as a triangle, but we don't yet know what we get. From a probabilities perspective, a zigzag and a flat are more common than a triangle in a wave Y. Now, if we then zoom in to this wave X and explain why the probabilities are higher to at least continue ranging / taking out the high at 63K, it is because of this count over here on the 1-hour time frame. So this is the corrective structure, zigzag in a wave W, WXY in a wave X, and then a flat structure in a wave Y, a sideways double combo, where, as mentioned last night, preferably we make a low for wave Y in the target box, first of all, but also after at least the 0.382 fib time taken from the start to the end of W to the end of X, comparing W with wave Y, which is also something we have done. Target area for wave Y is 58.4K to 55.3K. This is your area of interest. This is where you want to observe price and look for local signs of strength to then move towards the upside. Now the fibs here are, by the way, taken from the start to the end of W to the end of X as well. Inside wave Y, we are then looking for a flat zigzag X flat structure, and you can see that now wave C in a flat, A, B, impulsive C to the downside has moved to about the 2.618, which is still a target for a wave C, But preferably, we are not going to move all the way down to, let's say, the 1 to the 1.236, because that would be quite far for a wave C. But at the moment, this WXY has the highest probabilities locally. But this means that the probabilities are higher to still move up for wave Y in the blue count, as explained on the 4-hour time frame, right? To take out 63K. And the reason this has a higher probability is also because the bearish counts, where you would have a finished top here and look for price to move down, have a lower probability. Let me explain, because there's two. First of all, is a wave 1 to look for a bigger wave 3 to the downside. The reason this count has lower probabilities is because inside wave 2, we then count a flat A, B, C, and it is a running flat because C did not take the high of wave A, and a running flat is rare, never preferred unless all of the other stuff fails, right? Which it hasn't yet. And then over here we have a wave B. Wave B retraced to the 1.618 Fibonacci, taken from the low to the high of wave A. And the 1.618 is rare for B. It significantly reduces probabilities for an expanding flat structure, which therefore, in line with this becoming a running flat, is not great. And then 3 is that this wave 2 here is 8 times longer in time than your wave 1, Fib time taken from the start to the end of wave 1. And that is very rare for a wave 2. Preferably a wave 2 is ending between the 382 and a 2 or 3 Fib time, but not an 8 Fib time, if you know what I mean. Then the second scenario would be to count this as an impulse down. This is a corrective structure up, and you look for a wave 3 towards the downside. Now, what lowers the probabilities in this bearish count is your wave 4, because of course, if this is counted a 1, 2, we need a wave 4, 5, right? So you have your 3, 4, and a 5. But look at the size of your wave 4 here, right? On the lower time frame, very, very, very short compared to your wave 2. Most commonly, wave 4 is longer than wave 2, and if not longer, you at least want to see a wave 4 move beyond the 0.382 Fib time, taken from the start to the end of 2 to the end of 3, comparing 2 with wave 4 in time. So that is not ideal. Preferably, the 4 that I labeled over here is simply a lower degree wave 4. 1, 2, 1, 2, 3, 4, 5, 4, 5, right? But then we can't end a wave 1 at the low that we have on the chart here at the moment. So in other words, the probabilities at the moment in this range over here are higher, that this is a corrective structure, which increases the probabilities to continue ranging, first of all, but also to still take out the high and 63K. Now, if you then move to the daily bearish scenarios, which I do think is important to at least talk about because of the 4-hour probabilities here locally, which does look a bit 3-wavy, then first of all, we then have our A, B, and our ending diagonal in a wave C. It's very early to talk diagonals because, again, preferably you look for a wave 4 to be finished, but at least it is something to consider where you're going to be moving to the mid-40s in an ending diagonal. From a probabilities perspective, having a diagonal in wave A as well as in wave C is low probabilities, simply because you do like alternation where A diagonal, preferably C sharp, right? Or A sharp and then a C diagonal instead of having 2 diagonals. Now, it's not an invalidation. It is possible. There's no rule that says you can't have a diagonal A and C, but preferably we do see that alternation. Nonetheless, something to keep in mind. A WXY, though, starts to look better compared to that ABC, where we then have a WX and look for a zigzag in a wave Y. In this case, we then have an A, B, and look for a C. Now, preferably, in this case, your B is still going to move up, right? Because currently, the target for your C is 41.8 to 36.8K, which is incredibly low. Also is below the 38.5K level over here, at least partly, which would pretty much be like an invalidation for a bull market. So that's not really what we want to approach, right? So preferably, and that is also based on probabilities, this wave B moves up higher, which would work with the 1-hour probabilities. And if we then move the fibs here, up as well, and let's say price goes to 65 or 66, maybe even 67k, then you can see that the 1 and the 1.236, your most common target area, is 46k to 41.1k, and that at least is interesting because we have some additional areas of support in this particular area, and we don't break the 38.5k level, which is nice to see as well, right? So this is at least something to keep in mind. Now, when we then look at the news today, we still have a little bit of news. 2:30 p.m. Central European time. Make sure you trade safe around that hour. And if we then finally look at the probabilities of the different scenarios, then on the 1 hour time frame, the probabilities are highest for the bulls, where this is counted as a 3-wave corrective structure compared to this being an impulsive structure to the downside. This in turn increases the probabilities to take 63k still and then take it from there. It is important we wait for some local signs of strength here because of wave C and wave Y being quite extended, moving to the 2.618 trend-based fib extension. Keep also an eye on the daily naked point of control, always interesting support, 57,150. On the 4-hour time frame, the probabilities at the moment are highest for the bears compared to the bulls. We can't deny the 3-wave look up from the low at 49k, this move to the upside over here. For the bulls, we need to count this move to the upside as an impulse or look for a bigger diagonal or a multi 1-2. But as explained, an impulse does look very awkward. There is at least the opportunity to count it impulsive, but it looks more awkward than an ABC to the upside. So it is very awkward to count an impulse in the move up. Maybe it is there, but that's only something we will then figure out later if price can move to the upside once again. Because if we do move up, we want price to move up impulsively to increase probabilities. This is an impulse. If we move up in a 3-wave structure or a flat structure, that is not what we want to see. So we need price to at least take out 63k, move up in an impulsive structure, and then observe the range over here to see if this range is corrective, and if it is, increases probabilities to continue up. If it is, however, impulsive to the downside, well, you know what's going to be next, right? When we look for a diagonal here, well, low probabilities, because for now, this range over here has lower probabilities of being a zigzag 535 or a double zigzag structure, and for a multi 1-2, also low probabilities because the second wave 2 is enormous compared to the first wave 2. So the bulls need at least another high above 63k to then see what structure do we get towards the upside. You want it as a bull to be an impulsive move to the upside, right? A 5-wave impulsive structure. And then we need to see what range is going to form up here, right? And this is what's going to potentially change the probabilities on a 4-hour time frame and the daily time frame, which at the moment are labeled as bearish, but depending on the 1-hour time frame and the potential probabilities of taking the high at 63, those probabilities can change. Because on the daily, well, the daily simply follows the 4-hour probabilities, bearish, as long as price doesn't take out at least 63k as a bare minimum, right? So it's going to be aligned with the 4-hour probabilities. Simple, right? Summary of the probabilities to make it a bit more simple. 1 hour bullish is 63k / continuation of the range, which as shown has the higher probability. Wait for signs of strength. If price can take out a 63k, we can observe the price movement towards the upside and also the future range. And this may change the probabilities on a 4-hour and a daily time frame, because at the moment, as it stands, these probabilities would be higher for the bears compared to the bulls. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves Guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.